Just waiting for everyone to log in. Hey guys and girls, Nathan here. Hopefully you're doing well. Just waiting for all pages to connect in here. Smash up the likes when you're on board, just so I can make sure that you're here. Don't know what's happening to the screen there, guys. Hey Melissa, hope you're doing well. For some reason my screen is flashing. Hopefully it's all okay on your side. Hey Andrew, hope you're doing well. Just wanted to tune in for Tuesday night chats. Vic, appreciate the thumbs up regarding Birchfeed. Glad that you're liking it. If you don't have access to Birchfeed yet, guys, make sure you hit up my team, send them an email with your phone number on it, and they will add you to the Birchfeed. So really important that everyone get on there, see history before it happens. Today, wearing my Tell Your Boss Where to Go t-shirt. Question is, in this time, are you telling your boss where to go, or is your boss telling you where to go? Hopefully everyone's doing all good. Want to talk about some important things today. Hopefully, can you just let me know if the screen's flickering by any chance? Because it's flickering here on my end, which is really weird. Gordon, glad to hear you're enjoying the Birchfeed. Dean, thanks for the feedback on the shirt. So going back 10 years ago, 11 years ago, 12 years ago, the GFC saw me be able to tell. Awesome. Good to hear that it's not flickering. It's just flickering at my end, which is really distracting here. Thanks, guys. So with... Good question, James. Nathan, you keep talking about interest rates coming down, inflation happening. I completely agree with you, but what signs would you look forward to see this happening? Interest rates going up and property prices declining. Good question. I'm going to cover a lot about inflation, deflation, and that topic today. 11 years ago, told my boss where to go. Maybe even 12 years ago, it was a very similar sort of time. Just not everyone was sort of under house arrest, but we had the GFC. This is a time where opportunities really present themselves. A lot of people, in this period of time, I'm finding are fearful, and this is a time where you should be embracing, this market and the opportunities that present themselves out there at this point in time. Some of the interesting news that's happening out there this week. There was an article I saw here on news.com. It says here, Victoria considers axing stamp duty tax due to the scamdemic. That's on news.com. Just saying. Some other little notes when I saw this. I thought, what else could they be? Did my lights just flash? It's weird. Could we be seeing land tax removal? That could be something that we could see to help stimulate the economy from a property front. Really loving seeing what's happening out there around the world. We're seeing massive market manipulation as it comes in through. It wasn't me just seeing the lights went out, but my screen's flickering as well. Something's up. It's really weird. But a lot of if we look around the world, there's a lot of manipulation happening out there in the financial markets. Financial markets, whether it be the stock market, the Dow Jones, whether it's the ASX, a lot of manipulation happening in these markets. Wow, it's lights are flickering in other people's places as well. I don't know why it's flickering. It's really weird. I'm seeing here the video streaming. Maybe it could be something to do with the internet quality. But yeah, with it, seeing manipulation happening around the markets, right? We've seen, I think it was 2 weeks ago, there was an article I posted in Birchfeed, and it said the largest week in death toll in New York, but then it said also the best week ever in the stock market. It's like, how can you have this massive crash occurring, with people locked in their houses, economy froze, and all that sort of stuff, but then ultimately see, the stock market having the best week in history. I'm stuttering now. So yeah, with it, what other markets are being manipulated? And I've seen some articles coming out, and I hear a lot of people talking about, are we going to have a property market crash? I was very excited to see the GFD, the global financial depression, which we're seeing at the moment. However, a lot of people were like, why are you hoping on for bad things to happen? What would I be thinking if I saw the property market crash? I would love to see the property market crash, right? There's people out there saying the property market's going to crash 20%, the property market crash 40%. I even heard one guy on YouTube the other day saying housing's going to correct to 90%, right? And it's just absurd. It's absolutely crazy. They're like, there's so much debt out there, it's going to implode. There's too much money printing, things are overinflated, etc. What we're going to understand is that the whole game and the whole illusion is the debt game that we've got. The opportunity is the amount of debt that's out there in the marketplace. The opportunity is the ability to take assets that are attached to this debt and be able to move them into another market cycle. Tommy, hope you're doing well, bro. And that's the opportunity there. They would never give up this game, right? They're not going to give it up, right? They're going to throw the kitchen sink at it, just like they bowed out all the corporations in the GFC, just as they re-stimulate the economy post-GFC, just as they're doing at the moment, buying up all the bonds, just as they're buying up all, the repo market out there, just as they're manipulating and artificially keeping down, precious metals and whatnot. Really, do I see that they're going to let the property market tank? If the property market tanks 20%, there'll be a lot of problems out there for the banks. We're just starting to see problems in the banks. I'm going to go through my news notes very shortly. However, are we going to see then just let the whole system implode? I doubt it. I bet that it won't. The reason why I bet that it won't is I'm banking on it myself, right? I understand the banker's game, understand how the banker works, understand how the banker thinks, and, travel behind the banker, understanding that if they turn the steering wheel to this direction, the car's going to go this direction. If they turn it this direction, it's going to go this direction. So need to look at the signs. So if we were to see a crash, I'd love to see properties lose. I'd love to see the property market lose a shitload of money. The reason being is I could pick up assets cheaper, and they would have to throw a whole pile more stimulus at the market to keep it alive. We've seen them drop interest rates now. We've seen them, if we just look at business at the moment, right? What are they doing to stop? Businesses from going under at this point in time? What they're doing is that they have, the unemployment rate's going down. They've got whatever your unemployment was at the time, 4%, 5% before all of this occurred. That could be 10%, could be 15%, could be 20% at this point. It could end up at 40% unemployment. But they've stepped in and given this JobKeeper package, and they've given all these stimulus packages to business to try and keep them afloat. Ultimately, they're going to see, unemployment through the roof, which they would have seen anyway through the GFD. They're going to be able to now say, look, it was the scamdemic that caused it. It was nothing to do with us, and they're going to mop the floor with the virus and be able to stimulate money into the system. Looking at the what they're doing in order to keep unemployment low, they're artificially manipulating the numbers by putting JobKeeper in place. all those people would be lining up at Centrelink if they weren't getting paid to go to work, right? We could see 50% unemployment at the moment if it wasn't for the JobKeeper package. So they're stimulating the economy by injecting liquidity into it. If there was a crash in property, it would be fantastic because they'll be injecting liquidity in the market and it will reinflate. The only reason why you have a contraction period is from deflation. And when you reinflate the market, that's where inflation comes from. Looking at some of the things that they could be doing to stimulate the economy and keep it buoyant with the property market. As I said, the article from news.com, Victoria considers axing stamp duty tax due to pandemic. Imagine seeing them re-implement stamp duty after this, right? It will be much more difficult. Could they remove land tax? So someone asked me on here, would that mean land tax as in council rates? Would that mean land tax? I believe land tax as in the state government charges, which would be really interesting to see. A lot of revenue comes from the state, from those sort of revenues. But if they did remove that, that could be a big thing to push up investment into the property market. If we sort of crash, properties would be cheaper, cool, but they're already cheap. If we're looking at how currency is flowing through the system, they've just printed $400 billion. They'll end up in trillions of dollars worth of money printing through this exercise. I still strongly believe that we won't get out the other side of this without $1 trillion worth of liquidity injected into the economy. So we're halfway there at least. Could even be like in the $2 or $3 trillion sort of level to get us through this. Looking at, what else do we have here? What other opportunities would we have in a property crash, right? Just think about it, like what other things could they do to stimulate the markets? We've got a trading halt yesterday on NAB. Why did they go into a trading halt? There's an article here, NAB placed in trading halt over the half-year earnings for 2020. They dived 51%, is it? It's going back to the NAB's cash earnings for fiscal 2020 have dived by 51.4% over Corona. Its half-year net profit for the 6 months to March 31 also down by 51.3%. Australia's biggest lender has been placed into ASX trading hold. It's hoping to raise $3 billion through capital raising with 212 million new shares. So they're issuing new shares. We're seeing the banks in trouble here. I posted an article just about an hour ago into Birchfeed looking at the smaller banks. The smaller banks are in a lot of trouble. People not being able to pay their mortgages. Looking at interest rates at the moment. If we look at the 30-day interbank cash rate futures, if you just type into Google like the ASX 30-day yield curve, I will post a link to this in Birchfeed. If you're not in Birchfeed, you need to go and get access to it. You can email my team your phone number and they'll add you. It's the only way to get in there. But I'll post the link in there. I'll post the actual images every day. But it's the first time I've ever seen this beforehand. I'll grab a photo for you guys now. That is the chart I'm referring to. Here on this end of the chart, I'm going to zoom in. We can see April 20, and we see May 20, June 20, 15.5, 12, 12, and then the other one's 12.5, and then 12.5, 12.5. This is the first time I've ever seen it at 12 on any of the months coming into the future. And the importance on that is that every time it goes under halfway point of the new cash rate, so if it was going to be cash rate decision day today, being the first Tuesday of the month, which is not, it's next Tuesday, and we will find out next Tuesday if they do reduce the cash rate. If it was the first Tuesday, and that was the result. Generally, you would see, I've been watching this every day, every week, for over 12 years. I screwed up once by fixing my interest rates at nearly 9%, and I wanted to know more about how interest rate projections work. That was my closest chart to work from. A lot of people think I'm a time traveler when I talk about interest rates, 6 months out, 12 months out, 3 months out, and the rate cuts and actual movements, which a lot of you guys will remember. I said we would see 0 to negative interest rates come the end of financial year, which May is next month, and we're going to be at 0 potentially. But at the same spectrum, we've had a lot of people come in and say, well, the RBA has commented that they will not be going to 0 rate. 0.25 is the lowest that they're going to go. So on an average month, this would indicate to me that they're going to do a rate cut. However, given that they've said they won't be going less than 25 basis points, it will be a test to see if anything that's coming out of the Treasurer's mouth is actually false or if it's actual factual. And it will be interesting to see if they go to 0, because if they go to 0, then the RBA has shown their hand that they are not in control anymore, and the market is forcing those rates to go negative, and it will cause a big impact into the system. They'll have to either buy up a lot more bonds, which they're doing at the moment. They're artificially keeping the market above 0%, or it will slide under there. So either way, it will come at the cost of our currency and liquidity coming into the system. They're either going to print their way through it, or they're going to stimulate the economy from that perspective. So with it, it's very interesting to see that. If we look at supply and demand of currency out there in the system, a lot of people often say, well, can you talk to me about the difference between inflation and deflation in real terms? So if we look at what deflation means, it's money that's being taken out of the system. A recessionary period, a contraction period, is where there is a lack of liquidity in the system. Inflation is caused from money being printed and prices of goods rising. If there's less money in the system, the price of goods come down. If there's more money coming into the system, it means the cost of goods will rise. Looking at this point in time, it's a very, very interesting. I'm just looking at the comments here. What was I going to say here? Looking at the level of inflation, we're at a very, very interesting point in time where we're in a deflationary period, but we're starting to see levels of higher inflation. So where's the inflation coming from? The inflation is coming in the cost of your food is becoming more expensive. The cost of essentials are becoming more expensive. You can have a two-part economy, which I think we're going to start seeing them split off, which is the cost of assets, not being inflated so much, but the cost of actual goods, whether it be, I had a smoothie before, and a spoon or a cup. That's my NutriBullet cup there. Glass, a bottle, an iPhone. Things that people use on a day-to-day basis could technically inflate, where an asset may stay stagnant. And a lot of people ask me, Nathan, tell me about Japan, right? If we look at the Japanese market, there's a thing called a stagflation, which Japan has done nothing for 30 odd years. Now, the market's just gone sideways, and that's because they're printing money. There's a very big difference, fundamental difference between Japanese economy and most of the other advanced economies in the world. And that fundamental difference is that the Japanese economy, they print their own money, and they just keep printing in their own currency, which is causing no actual growth. However, in other currencies, like if we look at the Aussie dollar, we can manipulate our bonds in multiple different ways, and in essence, be able to sell and borrow money from other countries around the world. So For example, if we look at Japan, they're just printing and they're in a closed economy. If we look at the Australian economy, we can pull our funding from the US dollar and whatnot. Looking at the position of, for some reason, this screen just keeps flickering. It's very distracting from my side. So, looking at the stimulus, looking at some of the stimulus packages that we're going to start seeing here, I believe we're going to see a lot of assets being purchased by the state, us devaluing our own currency here. I just look at the comments here, it's crazy. Looking at some other articles that we've seen today, there's an article which I posted in Birchfeed. I was behind a paywall. One of my friends had sent this over to me. It is an article in the Sydney Morning Herald saying New South Wales government may buy up spare housing in a $500 million stimulus plan. It goes on to read, the Berejiklian government is considering a $500 million spending spree, snapping up unsold apartments and fast-tracking construction as a part of its Corona economy recovery plan. Cabinet briefing paper prepared by the government's Land and Housing Corporation says housing-focused stimulus package would accelerate development and boost employment in New South Wales. They need the housing market to be strong in order for the greater economy to have that sort of trickle-down economics. So is the buyer of the market, this here is the title of it. It's in Birchfeed, but I'll just share it just in case someone's on there. New South Wales government may buy up spare $500 million in housing stimulus plan. That's insane, right? There's housing commission for everyone. There's a lot of people out there that are fearing this market at the moment. There's a lot of people that are, thinking that the sky is going to fall in, house prices are going to collapse. There's a lot of larger drivers that need this economy to stay afloat. If we look at the US, the Dow Jones market, looking at the messages coming through, the Dow Jones market needs to be propped up to stop an implosion over there. In Australia, it appears the equivalent is the housing market. So, am I saying that property isn't in a bubble, is in a bubble? I believe the currency that we use is in a tremendous, tremendous bubble. And I think that it's got a fair bit more manipulation to be had with it before anything starts, imploding. The point when I sit here and I start talking to you about me paying down my mortgages, me paying out my debt, that is the point that you guys should be very concerned about. So, and obviously, as always, just made me remind myself when I said that none of this is obviously financial advice, but looking at when I will be scared, that's when I'll be paying down my debt. And at this point in time, I'm trying to acquire more and more assets because I'm seeing the amount of, if we go back to the supply and demand comments that I was making beforehand, the more currency / money which is being put out there into the market, basic supply and demand metrics come into play. So if they're printing off more money, there's more money floating around in the system. This currency / money will be out there. It'll need a home to go to. So at this point in time, we could see high levels of inflation going to the cost of goods, which is something that I'd expect to see over the course of the next 12, 24 months. The reason being, and this isn't the hyperinflation I'm talking about, the hyperinflation will come at the next phase of our economy after we get through where we're at the moment. If we look at when these businesses go back to business as usual, you're going to see less employees. There's going to be less activity happening to the businesses. The profit margins in the businesses are very low in some businesses, and these businesses will be forced to the wall unless they increase their prices. So there'll be less businesses opening back up and opening the doors up, meaning that the cost of goods, right? I was talking to my hairdresser. I had a bit of a haircut since last Tuesday. And when I was talking to my hairdresser, I said, there's no other hairdressers around at the moment. Why don't you put your prices up? He's like, I just cut hair and whatever, and business is down a little bit. I said, yeah, but if you put up your prices, no one's going to complain. I'd pay you double the amount to cut my hair because I just want to get a haircut and I don't want to have to, not have the haircut. So, there will be inflation coming into the market over the course of the next little while, but it's not going to be the big blow off top hyperinflation that I'm talking about. That will come later on as a lot of this money that's being printed at the moment will find itself a home maybe 3 years, 5 years, 7 years, 10 years down the track. We've seen a few other things happen out there in the news this week. There's an article that I just saw. I haven't been through the article, but I will refer back to it just at the moment. It was an article from the Financial Review that says the deal is understood to cover CommSec advisor services, which is worth close to $100 million. CBA sells CommSec division to a Japanese buyer. That's why I thought it was important for us to talk about Japan and tying it back to the inflation because, it's a stagflation over there. It's a very different economy. A lot of people say, how can you have a hyperinflation if we just lower rates to zero like Japan has, then we're just going to have an economy that goes sideways. Very, very different fundamentals to the market. And one of the things that a lot of traders actually, I'm not a trader, I don't, hop into different paper markets to do trades. But from what my understanding of it is that a lot of traders, when there's volatility in currencies, actually head towards the Japanese currency in order to have a protection there because it doesn't fluctuate that much. It's very, very flat. But it appears that CBA is selling CommSec division to a Japanese buyer. It's done a deal to sell off CommSec. What does that mean, for the markets? Should it be concerned or whatnot? I believe that that's a part of the Royal Commission when they were introducing the Glass-Steagall, which is separating the retail bank, which is mum and dad, home loan, put your deposit in the bank account, whatnot, into investment banking, which is, playing around in derivatives markets, investing into some very, funny sort of business sort of decisions. Derivatives being, the biggest time bomb out there in the market at the moment. Starting to see a separation in actual paper contracts and physical goods in different markets. If we look at the oil market last week, we saw I think it was the Canadian market, which was negative $37. It's shot back up. The paper contracts have, gone back over $20 since. And I think they've fallen in half again. Very, very volatile markets. However, it's not negative at the pump. You're not going to a Bowser and getting paid to take away a carload of petrol. And the reason being is that there is a distinct separation. If we look at, specifically like precious metals out there, silver, gold, if we see, the prices, I'm going to try and find some physical metal in Australia, and the Aussie dollar, I think it's about $31 from memory, or $27 from memory for the silver. I haven't looked at it for a few days. The price, you cannot find metal out there anywhere. There's no physical metal. They're trading in the ETFs, they're trading in the paper market. However, there is no metal for people to buy. So the price of, silver and gold has skyrocketed a lot. Looking at about $3,000 to pick up an ounce of gold. Looking close to $45 to pick up an ounce of silver in wherever you can find it. There's not many places that you can find it, so it's actually interesting. I just had a message come up here saying that an order had been filled for some physical metals on my screen while we're talking at the moment. So we're starting to see those paper markets implode. I talked about it 2 years ago with a lot of you guys, the people that were in Birchfeed, extensively covered the derivatives markets, extensively covered it in the 5-part webinar series that I put out, the Raw and Uncut, which is on YouTube. You can go check it out. It's about 8 hours of video, charts, graphs, stats, on what's happening out there and what's to come in the market, which is where we're at the moment. Looking at what else do we have here? One other article just on Japan while we're here. It's an article from the Telegraph in the UK. Bank of Japan set for unlimited money printing. This is unprecedented, guys. I can't even explain how crazy this stuff is. Bank of Japan set for unlimited money printing. Goes on to read the officials remove the cap on quantitative easing and increase purchases of corporate debt in a bid to stimulate the Japan's economy. Bank of Japan has opened the door to an unlimited money printing program by removing guidance that it would only buy government bonds worth up to 80 trillion yen per year. Officials also raised the cap on holdings of business debt, including commercial paper and corporate bonds, from 7 trillion yen to 20 trillion yen as they sought up to step up quantitative easing. Do a little bit of more research. There's a lot of stuff out there on the in the markets regarding how Japan is very different. A lot of people always come up to me and say, Japan's got stagflation. Stagflation is basically it's not going up, not going down, just staying flat. So if a house is worth 100 grand, it's worth 100 grand here and 100 grand there. That economy doesn't work on the larger scale, and you need to have outside liquidity coming into your markets as well, and Japan does not have that with their currency and how they trade there. So on that note, guys, I think I've covered off on a lot of my news and whatnot, and just my views of what I'm seeing out there. Going to put it over to you guys to questions. Seeing some jokes in here, which is cool. Nice tea, Dean. Yep. Tell your boss where to go. It's an old Be Invested shirt that I found in my office today, and I thought I'd chuck it on just for the fun. Manrico, hey mate, what do you think of BTC halving, and what coin is cheap at the moment, in your opinion? I haven't been in buying any crypto recently. I have a lot of crypto already. I did do a trade. It was some coin that I got that was for free, that someone had dropped, and it was a sizable amount, and I thought it was like, this looks crap, I'm going to sell it off. So I just swapped it for base cryptocurrency being Bitcoin. What is going to happen in a couple of weeks when we see the Bitcoin halving? It actually halves almost at my birthday, which is very cool. But basically, for those of you that aren't too familiar with crypto markets, every 4 years there's a thing called a halving event, which is basically where the rewards for Bitcoin mining, you have a computer that does specific tasks that calculates and computes all the transactions, so it's sensorless and it doesn't require third-party verification and whatnot. So it removes the need for government and control and manipulation of the currency that's on the platform. There's a reward that gets spit out, which I think it started off at 50 Bitcoin per block, and then as a reward. So if your computer is the one that's successful, or your pool that you're in is successful, you get 50 Bitcoin. Then went down to 25 Bitcoin. Then it went down to 12 and a half, and now it's going into half again at 6.25 Bitcoin per block. Each time that it does that is normally accompanied by a very large bullish upswing and an increase in price. Something is very different this time that we're seeing the Bitcoin halving occur. This time we've seen a lot of paper trading happening in the COMEX and futures trading around the prices of Bitcoin. And I believe the market is artificially suppressed nowadays from where it was taking off in late 2017. Looking at what will happen after this, just interesting times. I'm personally still holding on to all of my crypto. I haven't sold anything. I'm not actively buying stuff at the moment, just due to the fact that I've got a very large sort of crypto holding. My plan is, once it does take off again, where it takes off to, who knows? There is talks that Bitcoin could hit $100,000, $200,000, $300,000, even up to $1 million. Whether it does or not, who's to know? I personally see the potential. If it was left alone as a free market, it wasn't manipulated like silver prices, oil contracts, and other markets around the world, especially the derivatives markets. I would see the potential for it to go up to those large sort of six figures, even in the seven figure category. But time will tell what happens and eventuates through this. Get your popcorn, guys, and if you're not invested in the crypto, obviously go and take a look at it. There's a lot of cool projects out there, a lot of decentralized projects, a lot of scams as well when it comes to cryptocurrencies. But I'm excited to see what comes from this because generally, I forget the exact numbers of the growth of crypto when the last halving event occurred, but normally it's like 10,000%. So it's if that was to occur at similar sort of growth of last halving event, it could put sort of Bitcoin price around the $250,000 to $500,000 if that was to occur. So, but I don't really have an opinion on that at this point in time, but I'm excited to see over the course of the next 12 months. I'm probably more excited than the halving event. I'm more excited to see how the behavior of crypto, Bitcoin, Litecoin, Ethereum, EOS, those type of cryptocurrencies will occur during this recessionary period and the injection of liquidity. If we look at the crypto market in early 2018, a lot of people saw the price of crypto fall off a cliff, especially in January to February of that year. If we look and overlay the Dow Jones, a lot of different sort of markets, a lot of them actually did the same occurrence at that period of time. So as we start seeing more liquidity flowing through the systems, I would anticipate that we'd see an upward trajectory in crypto. One other thing that I was thinking about on the Bitcoin market is a lot of people compare Bitcoin to to gold. So if you were to have a physical ounce of gold or have a Bitcoin, a lot of people compare them to be very similar. If people start failing on being able to purchase precious metals, whether it be silver or gold, out there, and they don't want to go to the paper markets. They have this extra money that they want to, or currency that they want to invest. It'd be interesting to see if there is a flock of people rushing in to buy cryptocurrencies during this period of time as well, because I think it's important to have physical sort of cryptocurrencies and not leaving them on exchanges or trading them as paper sort of markets. So that's just my view on that. James, Nathan, you keep talking about interest rates coming down and inflation happening. I completely agree with you, but what signs would you look for to see the opposite happen? Interest rates going up and property prices decline. Property prices declining would be deflation. We could see a level of decline happen in the property market. I believe that just as we're seeing them jump in at the moment and try and stop the business and the retail sector from imploding, I think that we'll ultimately see them do that. As I was saying beforehand, they'll jump into the market and inject liquidity in however they can, whatever way, shape, or form, to stop a market from going into deflation. It's just going to be interesting to see. Them dropping the interest rates is them trying to starve off deflation. Technically, the property market should be declining. It should have been declining the last decade, but the only thing that kept the economy going and the property market going was them manipulating. That's why I keep harping on the manipulation. It's not about, a house price is going to go up and all these sorts of things. It's the manipulation of the currency and the liquidity in the markets, which will ultimately mean they'll shoot upwards or come downwards. And what's happening out there in the market at the moment should be enough to sort of, hurt the property market, but I don't see it happening because they're going to be printing out all different types of stimulus packages to keep things humming along. One thing that we haven't seen, if we go and look at other markets around the world when it comes to property as well, in the US recently, there's been a lot of hedge funds that sort of came out. And there was an article from Robert Kiyosaki, I believe, where he said he sold a lot of his properties at stupid prices because these hedge funds were trying to get returns. And, the hedge funds were coming in to buy up properties. The government was buying up properties. There was all different people and buyers out there trying to buy up these properties to artificially keep their economy strong and the property market strong as well. We haven't even seen any of that occur over the course of the last decade. There's still lots of triggers and levers for the powers to be to manipulate, and I think we're going to see all the goodies come out over the course of the next 6 months, 12 months, 24 months, 36 months into the market. So loving the shirt. Cool. It looks like I need a sparky. Yep, that was the lights going off beforehand. Do I think the coronavirus really exists? I believe that there is a sickness. People are getting sick. I'm not trying to displace the fact that there is something wrong out there. But if we look at the stats, look at the numbers, I'm no doctor, I'm no health professional. However, I believe that they've totally used this opportunity to wipe the floor, saying that it's a virus. There's the last time I pulled the stats, I haven't looked at the stats recently because I was looking at them a lot at the early point at this. I think it's about 500,000 people a year die around the world of influenza and flu. And at the point where I was looking at it before, and it was like 80,000. And there was a year-on-year sort of, from the start of the year to the end of March or whatever it was. When I looked at that, we've had 80 people die in Australia from alleged virus. When you put that in perspective, we've had 25 million people, which maybe only half of them are working now due to the fact that they've locked everyone in their house and whatnot. I not out there licking door handles and trying to show people that there's no sickness. However, I'm not buying the fact that not buying the fact that we all should be sitting at home at the same point. So I don't think it's anything greater than a normal virus. That's personal viewpoint. Is it 5G that's causing it? I've posted some controversial topics on that on Birchfeed. However, I don't think it's caused by 5G personally. I think that 5G is not good for anyone. I think a lot of radiation, there's a lot of health negative effects from that. There is a lot of conspiracy theories going out on that front. However, I feel that, there isn't a virus to the extent of what everyone's freaking out about. Kane, thanks for the great property review last week. Looking forward to making another purchase with you and hearing back from Rose and Josh. Kane, appreciate the chat, appreciate the feedback. Cool having a chat with you last week. If anyone in here wants a bit of a review of their position, wants an update to see what options there are, sort of what moves you should be making throughout this market, feel free to reach out to my office. My team will organise a chat. I'm booked out for months in advance. It's very difficult to fit me in now. So there's only minimal sort of bookings available over the course of the next sort of 6 months, just because everyone wants to know, look, Nathan, you've called that we're going to have financial collapse. We're in a financial turmoil position. Should I be, selling something? Should I be buying something? Should I be restructuring something? Should I be putting an extra few layers of protection in? Should I be sort of protecting cars or bikes flying around here? With it, a lot of people are wondering what they need to do next. If you are stuck at the moment, feel free to reach out to my office. there are very limited spots to have a chat. But appreciate, Kane, for the feedback, and glad that you had a good chat and got a lot from our conversation. George, thanks for sharing again, mate. Good chatting last week. Thanks, George. Good chatting. Just like I just said to Kane, glad that you got a lot out of our chat. Good chatting to you as well. Trent, you should start naming a new currency. It might catch on. Maybe we should throw a few comments in the box as to what we could name a new currency. But I bet you that whatever the new currency is that they will create will be just as shit as the current currency that we have, with a lot of manipulation in it. And let me just highlight a point, right? Like, I was thinking about it the other day, and I keep going back to this chart. There was a chart that I shared about a month ago with the community, and the chart was because a mate of mine had asked me, what would happen if we went back to a gold-backed economy or a precious metal-backed currency? And I was like, I've never looked at the chart. And I went and pulled out a chart and overlaid and looked at what major events had occurred at certain points in history. And before they debased the currency from the gold standard, property remained very flat. Like, property was very ugly prior to the removal of the debasement of the currency. So before the 70s, before the 80s, property sort of just remained flat. The only reason why property is going so great is due to the fact of the manipulation of the currency. So I've got to give some credit where it's due. Like, these people, sort of boring out the economy and screwing the economy with this fake fiat Ponzi scheme cash that everyone uses. However, if they didn't do that, you wouldn't see such growth on things. You wouldn't see such high levels of inflation, and property may not even be such an attractive commodity if the currency wasn't so manipulated. So understanding the currency that we're using and being able to make the right moves when it comes to you're purchasing the right assets with it and putting that money into currency into a home. It's I always talk about how bad the currency is. It's actually quite good because it gives us the opportunities of what we've got here today. And I think we will lose the currency over the course of the next decade, but the biggest growth period is yet to come as they totally destroy the current monetary debt-based fiat Ponzi scheme system that we've got, which is using dollars as we refer to them as. But if we want to try and talk about a new currency and a new name that might catch on, let's try and think of a few suggestions. Throw it in the suggestion box there. Harpreet, how do I look at the Perth property market? Up until now, it's been very ugly from my perspective. I haven't liked the Perth property market, but I'm a contrarian investor. I buy things that people would normally stick away from. And I'm seeing some good opportunity over there at the moment. Like, we've picked up a few properties recently in Perth, which have been more than less than half the price of what previous owners had paid for. Some properties are like 1/5 of what people paid for beforehand. Positive cash flow, good upside for growth. It will rebound, and I think it's very oversold at the moment. But I wouldn't say it's my favourite market. I think that it's good, it's on par, but I still do like Sydney and the Queensland, the Southeast Queensland corridor as well. Andrew, what type of building weighs the least? A lighthouse? I saw a lot of your comments there before in those jokes. Sean, it would be great if Victoria removes stamp duty. They charge an absurdly high amount, possibly the highest rate of Australian states, depending on the size of the property purchase. All taxation is theft. Taxation is theft. I should wear my taxation is theft hat. But yeah. Tina, can I correct you, Nathan? They want to implement a new tax by removing stamp duty up front, but bringing it into a whole new tax similar to the yearly tax, such as land tax. Tina, good comment there. It's important to watch out for that fine print, because at some point, these crony government commie controllers of us, will want to earn it in some other capacity. So it's important to look out for those opportunities. For those of you that are just tuning in, I was talking about the potential of Victoria removing, it was a news article, removing stamp duty. Whenever they play around with the taxes like that, there is always a knock-on effect. They've got to pay for it from somewhere. So someone's going to foot the bill. Do you think everyone's sitting at home as well, guys, earning $1,500 a fortnight from JobKeeper? Do you think that's not going to come at a cost? Someone's going to pay for it. The businesses are paying for it at the moment. Consumer spending is going to be paying for it. It's going to ultimately come at the cost of taxation to the saviours via inflation. So, yeah, important to look at that. So thanks for bringing that up, Tina. Really good. David, starting to hear councils and state governments fast-tracking infrastructure. Good point, David. A few years ago when I talked about the GFD coming out, I had a mentoring program which was running over the course of 12 months, talking about what to expect, what would come from it. And I talked a lot about government spending and infrastructure projects, due to the fact that if we have a downturn or a slowdown in some sort of industries, the government will put infrastructure projects in place. It's just another way of injecting liquidity in the system. They take out bonds, they take out debt, they purchase infrastructure, they work out new ways to tax it, they get all the people that could be a concreter, concreting driveways and footings for houses, a bit slow on work, pick up a contract, being able to concrete a new bridge, a new tunnel, whatever the case may be. Just another way of stimulating the economy. And if they're fast tracking it, just shows how desperate they are to actually inject more liquidity in the marketplace. Don't get me wrong, guys. I talk about property being great. I think property will do great out of this cycle. Hence why I'm still trying to purchase as much as I can and seeing it as a great opportunity. The economy as a whole is in, an ugly sort of position, and that's great, right? It's like the corporations that are sitting there and they're going, "It's great. We're going to get bailed out here. Look for the opportunity to get bailed out. There will be winners, there will be losers out of this market, and it will come in the form of different sort of stimulus packages. How can you collect them? How can you benefit from them? And what will ultimately be the landscape of this market, and what are we going to see in the next 3-5 years? In 5 years' time, we need to look at the long game, right? If you're an investor out there at the moment, thinking, house prices might fall, house prices might go up, whatever the case may be, I don't see it falling off a cliff. I don't see it going up like this straight away. I see it, maybe a little bit up, maybe a little bit down. I've been gazumped still on properties. It's still getting gazumped on a regular basis. I just lost another one today. So there is a lot of buyer activity out there in the marketplace, but we need to look forward in 3 years or 5 years' time, because when the market takes off, it takes off with a lot of velocity and very ferociously. Where are you going to be positioned with that right portfolio that's going to get you to where you want to be? So if you are in a position where you sort of got one property and it doubles, so you got 500 grand doubling to $1 million, you could be cool. I just made $500,000, but have you really made $1 million based on the fact that the $500,000 based on the fact that everything else has doubled or tripled in the same time frame? Or do you want to be in a position where you've got $2 million doubling into $4 million? Do you want to be in a position where you got $5 million doubling into $10 million? And then sort of break it down and think to yourself, will I be able to purchase and build out that portfolio in a period of 6 months? It's not overnight that someone builds a property portfolio of 5, 10, 15 properties. Planning it and picking up things while they're on the cheap is the greatest way of being able to fast track that move. Harrison, Deutsche Bank, going to post a profit, up 12% yesterday. Good time to invest. Absolutely not as financial advice. Talking about bailouts, actually, that bank is an institution which I doubt will ever fall by the looks of things, right? At under 5.78 euros, it is insolvent. The bank should implode. Magically, every time it hits down around the 5.8 level, 5.7 level, it always gets pushed back up. Everything else could be red in the day, and suddenly Deutsche Bank is very up on the high scale. So it, without giving any sort of, false tense of financial advice, it looks like a trading opportunity, guys, because they'll never let it go under that 5.78 euro point where it's actually insolvent level. And for those of you that are new here and haven't seen me talking about Deutsche Bank for the last 2 years, Deutsche Bank is holding so many derivatives. The ultimate position of this market is that they have to print over it, which will screw the currency to avoid a catastrophe of biblical proportions, or we will see the collapse at biblical proportions. And I think it's too much of a risk to see everything collapse, so they're going to print over it. But Deutsche Bank is insolvent at 5.78 euro, calculating the assets that they've got on their sheet, taking away the liability, and looking at that institution there. There's so many derivatives, right? What caused the GFC back in 2007, 2008 was $7.5–8 trillion worth of derivatives around the housing market in the US. Here we've got an institution that's got $50–60 trillion worth of derivatives. No one really knows. And these derivatives are on all different sort of financial assets. It's the toxic waste and the swamp of the financial system. And every large financial institution, I was talking about how CBA has been cut off from CommSec, and it appears that a Japanese buyer has come in and purchased CommSec to take that toxic dump away from mum and dad retail clients. If it blows up on someone else's clock or on their hands. And in my view, that is why we have seen these institutions being chopped up. But all of those investment banking firms, the Royal Commission exposed it, dealings between ANZ, Deutsche Bank, CommSec, Deutsche Bank. These were things that were brought to the light in that period of time. So if Deutsche Bank was to blow up, it would cause big, massive issues throughout all global economies around the world. Just going to take a breath for a moment. Hayden mentioned here, New South Wales government looking at buying available properties to spec new properties in a 500 million stimulus package. That's what I talked about. How does the market go down when the government is willing up to buy the available stock? It's amazing. It is amazing. There's a lot of doomsayers out there, and I guess it's great the government's buying up these properties because it's going to create an availability for them to be able to move into a property and be able to afford rent when hyperinflation sort of kicks in sometime down the track. How many insects do you need to make money for a rental unit? 10 ants. Andrew, I see a lot of your jokes here, keeping everyone here entertained. Vic, is crypto a next big thing? Which is the best cryptocurrency according to you? I don't like giving too much crypto feedback because it is a very bumpy ride out there. If I could give you some other sort of tips and feedback on that front, understand what's happening out there in the markets, understand the opportunities, try and take a bit of time to understand what is cryptocurrency, how it can counteract this debt-based Ponzi fiat scam system that we've got, using currency that we've got, dollars, money, whatever you want to call it. There is some Genesis coins, be it Bitcoin, Litecoin, Ethereum. There's a lot of EOS, a lot of these larger sort of projects, Monero, which is a privacy coin. There's two different types. There's a thing called a protocol and a thing called an application in crypto space. The protocol is basically the railway line or the energy grid. The application is the light bulb or the phone socket or the refrigerator plug, whatever plugs into that. I'm a big fan of having protocols that applications can run on, because there's always going to be a greater need for protocols over applications. So from my perspective, I invest only in protocols out there in the cryptocurrency world. Josh, how do you see the corona, I can't say that word, payouts affecting the investor market and new home loan buyers? It's going to be interesting to see how the banks, keep the system chugging along, right? And I always talk about the fact that we haven't even seen the real ramification of this. It's going to be the potential is so great from this time, and it's sort of important to go to the future, try and look at where it's going to be at, and then sort of see what sort of moves they're going to have to make now to get us to the future. And every action has a reaction in the world. So how a lever being pulled will cause another issue. As I read that, I was thinking about home loans, and if everyone's on a JobKeeper package, a lot of people won't realize, at the banks, they may not even realize. I believe that lending will have to get easier for them to get credit flowing. We've never got into a position of ninja loans, like the no job, no income sort of loans they did back in the GFC in the US. But I believe that the access to credit will come easier for a period of time until everyone starts getting access to that credit, and then we'll see it tighten up a lot. That's why I look at this window as being the opportunity. But yeah, it's going to be interesting. If people have lost their jobs, there's if we look at the market out there, 20% of people that are unemployed at the moment, they might not be able to get a loan. The banks are tightening up on some of their policies, saying that if you're in the hospitality trade, if you're in the tourism industry, you can't get a loan at the moment. Or if you're in retail, it's very difficult for people to get loans in those sort of industries. At the same token, I've seen a lot of owners pulling their properties off the market because they don't want to sell at this point in time, and they think they're going to get more in the future. So people taking their properties out of the market removes stock from the market. But ultimately, there's still 25 million people in this country, people wanting to make moves, people wanting to invest. I had a deal fall over today due to finance. It wasn't due to anything to do with this corona stuff. The purchase price was in Sydney. It was 15 Ks from the city. Sydney, it was $299,000. The owner of it pulled out of the deal because he didn't want to sell the property anymore. There's now nothing under $350,000. And he's like, I'm going to sell it for an extra, $40,000 or $50,000 than what I'm paying, than what I'm selling it for. So there is a lack of stock in the market, and that will ultimately depend. The banks are going to have to, change policy here. The central banks are going to have to change policy. One thing that's really cool that I've already gone to the future, looked for, and come back is the ability as interest rates fall in value, what that would unlock for potential price movement on the upside. If a property was selling beforehand for $500,000 or $1 million with a 5% interest rate or a 6% interest rate, interest rates have come down to 3s, even 2.5% out there. If someone can get a home loan at say 3%, that's half of what they would have been paying at 6%. That property has the ability to go up because the repayments would be the same. Say if it was $500,000 at $500,000 property, 100% loan, just hypothetical scenario, $500,000 property, 6% interest, that would be $30,000 a year of interest repayments on that property. If the interest rate went down to 3% and the price went up to $1 million, 3% of $1 million is now $30,000 a year. So as interest rates are coming down, as the central banks are forced to lower their rates, that's going to cause the opportunity for an upswing in the market. So I think it's important to understand and look at the future aspects of it, and how this can all sort of play out and the benefits. A lot of people ask me in the past, or actually criticized me in the past, saying, Nathan, you were talking of all this stuff that that's doom and gloom. 2 years ago, 3 years ago, I was talking about a property crash. I was talking about a financial market crash. I was talking about the global financial depression, which we're here. And I said at the point that it happens, that's when I'm going to be bullish, due to the fact that all these stimulus packages are going to cause the next boom. And if you look at any charts and look at whenever the currency has been manipulated, it's paved the road for asset prices to increase in value. And that's what I'm seeing happen. That's what I see happening here at this point in time. John, in this current market, do you think it's a good idea to cross-collateralize property and use equity to buy more properties? Or some banks are giving 95% LVR. Is it a good idea to do this, or 20% down better in this market? John, please do me a favor. Never cross your loans. I manage billions of dollars worth of mortgages out there on behalf of investors, and 0%, maybe there's $1 million worth of loan out of $1 billion that could be crossed for some stupid reason. None of my loans that I manage on behalf of my investors or owner occupiers are cross-collateralized. Do not do it. It's at a detriment for your own position, and an abetment for either the broker or for the bank to tie you into their home loan product. With it, if you'd like to send me a private message or email my office with some contact details, I'll get them to organise a chat. Make sure that you don't cross your properties. Everyone, no financial advice, but do not cross your properties. It is the worst thing you could do. It's basically committing, financial, not good. With it, if it was me in the market, I'd structure loans in a certain way, and that's how I've structured my own loans for my own personal property portfolio. But if you from a top level, is now a good time to pull out equity and be able to purchase properties? Well, if you've got equity in your property, I think it's always good to get access to that equity, even if it's just in an offset account, because you can use that money for whatever you want, for opportunities. So you get access to that equity as soon as you can. Is now the right time for you? I believe that the market hit the bottom in around June, July 2019. The market has started to increase since July last year, and it's sort of stopped, slightly bouncing along at the moment, ready for an uptick in the market. So if you are looking to build a property portfolio, one property isn't going to get someone to retirement. As I had my shirt beforehand, tell your boss where to go. One property, you can't tell your boss where to go. If you wanted to generate an income of, say, 75 grand a year, average rent of $300 a week, you'd need 5 properties owned outright to tell your boss where to go, bring in a replacement for your income. To build out a property portfolio of having 5 properties owned outright, it could take you 3 years, 5 years, 10 years to be able to do that. The opportunities that are out there at the moment, properties are on sale at the moment. Properties will not always be on sale. They might be on sale for the next 6 months, 12 months, maybe even 24 months. But with all this money that's being printed, it's going to ultimately lead to the next property boom. My position should be set. I've got enough properties in my portfolio, but it's never enough. Hence why I'm still trying to accumulate as much as I can at this point in time in the marketplace. But yeah, with it, if you'd like to hit up my team, I'll personally look over your position, give you a bit of feedback, reviews position, and give you a bit of a plan of attack on how to build out that portfolio. Just water time, guys. Oza, Nathan, what's a good read for someone who has never looked into cryptocurrency beforehand? I don't like reading that much. There's lots of articles out there. YouTube, there's a few cool sort of crypto people out there. There's a guy called Box Mining. His name's Michael. The Dollar Vigilante, Jeff Berwick. He has a thing called the Crypto Vigilante. He is an interesting character. People thought Nathan was a bit out there. Jeff Berwick's a totally different character, but check him out. A cool guy. He's got a team that write a newsletter there called the Crypto Vigilante. There is Ivan on Tech on YouTube. A guy called CryptoLark. He does some interesting videos out there as well. There is a lot of scammers in the place. Probably one of the best resources that I have liked on crypto videos is a channel called Datadash, DATADASH, on YouTube. Talks about some good fundamentals there. There's also a guy by the name of Anton Antonopoulos. Go check him out as well if you're looking at getting into crypto. But always, don't just listen to anybody. Don't just listen to me. Don't just listen to anyone out there. Make your own decisions. Get an understanding, get information, get education, and then be able to make a educated decision on what roads you want to travel and how it's going to benefit you and how it's going to help your long-term picture. So, Andrew, am I still mining? Yes and no. I certainly don't have all of my facilities going at the moment due to the fact of the returns, and it was taking a lot of my time. However, I've got some small-scale solar setups going, doing some R&D on that. Created a tech gizmo. One of my mates, John, helped me on that. I'm probably never going to talk about it publicly. That's how people get shot in the back of the head on creating gizmos that are, going to give unlimited sort of electricity for free. But I've got a prototype of something that works. And basically, it's a system that's going to be profitable for mining Bitcoin and other sort of cryptocurrencies. But yes, I am mining on that. I'm looking at scaling that out in the hundreds of acres to be able to mine just like people mine crops, farm crops. Same thing for cryptocurrency. But yes, I am working on that still. Peter, if shares tank in September, as you have said, then the housing market should also decrease as it has in the past. Good question, Peter. If we look at the share market, I see market going in the end of the year. That's my personal viewpoint. I believe that when it goes and falls off a cliff, we're going to see instantly, the RBA coming in and buying up and pushing that market up to get it back chugging along. Looking at the property market, that could happen. However, if we go back and look in the GFC, what occurred in the GFC, top-end properties got affected. Bread and butter, blue collar, CBD sort of properties actually performed very well. If we think about it, if we had a recession today on our hands, which we are in one, what would be more important? Would it be a Lamborghini or would it be a Ford Falcon or a Toyota Camry that would be more affordable for people? A lot of people at this point in time can't afford their high-end cars. If you want to go buy something cheap, go look for a high-end car at the moment. There's some great buying opportunities in the luxury car market because a lot of people are in pain and they're like, I've got to get rid of this, dump this car, whatever the case may be. However, if we look at the property market and think about it with the same mindset from the high-end market in property, that's where there was a lot of people affected in the GFC. This time here, we're practically at a 0% cash rate at the RBA. interest rates at 2 or 3%, it's much more difficult for people to be caught up in a financial position which is uncomfortable. However, when people lost money in the GFC, property was of a safety net due to the fact that shares were falling 30%, 40%, 50% in some instances. A lot of companies got wiped out in the GFC, and property was still a physical asset that was there that was bringing in a cash flow. As interest rates went down, a lot of properties became positive cash flow. What I'm finding at the moment in the market is that there is a lot of properties out there in capital cities that are positive cash flow, so the returns are going to be much greater than other sort of markets. So there is a pent-up demand, and a lot of people sitting there on the sidelines ready to take action. So that's why I'm much more optimistic on property than I am on any other sort of paper market. Cool. Nuggets News, got a few people here saying Nuggets News. I have checked out Nuggets News beforehand. Seems very on point, so check him out as well on YouTube. Cosmo, hey Nathan, been struggling to refinance for a few years now. Will banks reduce their serviceability rate soon? I believe that we will see in the short term, banks will ease up. I'm not saying right this minute, but maybe in the course of the next 12, 24 months, as things starting to recover, they may ease up on their serviceability. And that will be a small window for people to do refinancing, as well as being able to capitalise on the market. So, yeah, but I will reach out and have a look at your position as well. Maybe if you just want to flick me an email, and I'll come and see what I can do with your position for you. Peter, how would you know if a property is overvalued? It depends on the market. I always look at recent sales and other properties currently on the market for sale. So if you can see that 5 other similar properties have sold for less than this said property, that's a good indication. If you can see that there's other properties on the market that are cheaper for sale than the said property, then it's most likely overvalued. If you are buying a property, everything else is selling for $250 and you pick up something for $200, then you're buying it below market value. So yeah. Sam, if you had $1 million cash right now, what would you do with it? Interesting question. My position would be very different than most other people's positions. I would spend a bit of that in new acquisitions and picking up some stuff where people are on their knees, which is sort of what I'm doing at the moment already. But I would also spend some of that cash investing into my existing assets to improve them, to get greater cash flow returns on my assets. And I would also spend it on sprinkling it through the existing portfolios of what I've got. So I've got large allocations outside of property as well, but I'd probably put 70% of it into property, and the rest of it just into buffer. But that's just theoretical questions. I had $1.5 million hit my account last year. I've had some large amounts of like $500,000 sort of figures hit my account. And what I've done with that is purchased new property assets and increased values and cash flows on my existing assets, as well as sprinkling into some other things, as I mentioned there. But my position is different to others. So, everyone's position is different. So don't just, take what I'm saying here. Did I work at L&S Piermont? No, never worked at a Lang & Simmons. I think you're talking about Lang & Simmons, Piermont. Never, nah. Sorry, Jeff. Right, fiat system will collapse. Correct. The fiat currency system has severe cracks. It's in vegetative state. It will come out of this. They're saying Kim Jong-un is going to be a vegetable, saying reports that he may not survive, which is interesting and a whole other topic in itself. I believe the currency that we're using at the moment will come out in a vegetative state. The currency will end up in palliative care. Not saying that, run out. I could see Jeff saying buy gold or silver. I'm not a big fan of buying heaps of that. I do own a lot of precious metals. I still continue to buy and accumulate a little bit of precious metals. But there is a lot of other ways that you can hedge against inflation. Andrew, the third industrial revolution, SBS. Nathan, have you watched it? I believe I've seen that some while ago. If it's a video, I'm thinking it came out maybe like 2 years ago. It's an interesting watch if it's the one I'm thinking of. James, Nathan, great talk as always. Can you please expand on your comment? All taxes are theft. Happy to talk about that. Sorry, just need water again. Talking for an hour and a half dries the palate out, guys. With it, I believe taxation's theft, right? I didn't sign up for any of this. They go, it goes all into roads and whatnot. Where does the tax money go? Who gets to spend it? Who gets to choose it? Personally, people shouldn't be paying taxes. If we go back to the start of the 20th century, there was a tea tax, and there was very minimal taxes. There was nowhere near as many taxes that we have in place. We look at Australia here in 1901, we had the Federation, and there was a lot of systems and processes and procedures put into place at that period of time. Tagging, tracking, taxing. If we look back before in the 19th century, you could literally rock up to a country and they'd be like, here's a shovel, take that shovel and dig a hole. And you can work here and, be a part of our community or whatever. Now, human capital is, we're like cattle. Why do you think it takes so much time to bring a immigration into the country? Why do you think, when Donald Trump came into power, he had the shits that Malcolm Turnbull had done a deal with the Obama administration via sending refugees over to the US. Human capital, like we supply, people for army and whatnot. There's deals that are done in order to, we've done this, we've provided you with this service. You now need to take some of our, people that we don't want coming into our borders, our boat people, whatever the case may be. These all come at a cost. And, when someone leaves a country and migrates to a new country, there is an ability for that person to work, contribute to society, or cost society. And the average price, last time I checked it, you can go online, Google's a great thing, even though it's heavily censored, work out how much tax and how much a human life is worth. It's about $500,000 worth of tax payable. So humans are traded. That's why their birth certificate is now traded from one country. It is now traded for these ones. And, what deals have we done to migrate? Whose back have we scratched in order to take their human capital? And basically taxation is a cost of, our energy and our resources. We're a slave, we're a tax slave. We go to a 12-year indoctrination camp, be brainwashed, taken away from our family at the most important time of our livelihoods when we're a little kid, and sort of indoctrinated and gone, bell goes off, you can go out like a cattle, and in essence, be molded into being a tax slave. Go get a job. They don't teach you about finance. They don't teach you about, all the back end of how the tax system works. Basically, our taxes are going to pay, interest on the money that is created, or the currency that is created. So this currency is created out of thin air. If you think about it, let's assume the government makes $100, right? Or alleged government, right? The central bank makes it, puts it through the government and comes through the system. $100 gets created, and let's say there's a 5% interest bill, right? At the end of the year, you pay back the $100, right? Where did the 5% interest come from? You have to go into debt in order to get that $5 to pay the interest, and you've got to pay interest on that, right? If you think about it, like, it's thuggery. So when I talk about taxation being theft, I'm talking about the fact that our our liberty and our freedom is being under attack, and we don't even realize it. And we're being rolled by one entity. It's like it's worse than a Nigerian prince scam email that comes out. At least you've got the option of clicking on it and hoping that you're going to get some money mailed to you. But in this occasion, if you don't pay your taxes, you get kidnapped for 10 years and thrown into a jail cell to get bashed, beaten, attacked every single day of the week. That is theft, right? If someone went to roll you and jump you, they'd built the shit out of you, take you away from your family, demand that you get this. Like, tax office is no different. Question, where does the money go? Oh, it goes onto the roads. It goes onto this. Well, what about the motor service? What do I pay my rego for? What do I pay all the other sort of taxes along the way for? Like, it doesn't. There's a system here which is we're just a product. If we look at the matrix, little Energizer battery when they show it, that is, they're using our energy. It's more of a documentary than it is a sci-fi movie. And that's the energy that they're taking. They're taking our working energy. We're performing tasks for the ruling class, and we're having to pay taxes as a royalty for the fact of being alive. And sore throat, guys. Not corona. I burnt inside my mouth, and I've got a dry throat at the moment. Taxation is theft. Simone, have you been using your accounting firm, Jack from One Path Accountants, for the past few years? He's great. I'm able to email him information through and often have next day turning around. Amazing, awesome, Simone. Glad to hear the feedback about Jack. I hear lots of fantastic things about Jack from One Path Accountants. Tax time is coming up, guys. I'm going to do a shameless plug here as well. Tax time is coming up. I had Ridwan Hannan, who is the principal at One Path Accountants, on a video a few weeks ago. It actually ties very well into my last comment on the taxation is theft. I look at an accountant as being more of a bodyguard to try and protect your personal freedom and liberty in the system. So I'm humbled to hear that the guys on One Path have been able to help you out and be of constant contact and being able to keep you protected from the system. So if anyone needs help, feel free to reach out. I'll put you in contact with the guys at One Path. Harpreet, I want to invest in Perth real estate with your help. Do I need to wait the 6 months for your appointment? And I live in Perth also. Harpreet, email through to my office. Have a chat with my team. Email address is admin@beinvested.com.au. See what the team can do to book in for an appointment. I know that it's getting very jam-packed for appointments. Saturdays, some of you guys where I've been speaking to you, Saturdays, Sundays, every day, 7 days a week, like 8 appointments booked all the way out to August, which is cool because a lot of people are in trouble at the moment and stuff like that, and to have a lot of inquiry and people wanting to do business with us is really cool. But it is really tight schedule. I'm trying to commit as much time as I can to help out you guys. So yeah, if you do want to have a chat, reach out to my team. I'll see what they can do. But spots are limited. It might be a 3, 4, 5 week waiting period. Sometimes people pull out of appointments and whatnot. So reach out to my team and I'll see what I can do to fit you in. I want to help out as many people as I can in this period of time. Tina, Nathan, can I assume we're going to see debt levels in mum and dad households getting to a point where investors will start to see more mortgagee in possessions in the market? Tina, I don't believe we're going to see the mortgagee in possessions because interest rates are so low. I feel that we will see the debt levels spiral out of control, and ultimately inflation makes debt irrelevant. So it's like a sort of forgiveness as more currency gets created, floats through the system, more money out there, or currency out there, more debt that's in the system. Suddenly the old debt doesn't look as much as the new debt. And we're awash of paper, fiat, Ponzi scheme money nowadays. If you think about how many cars you saw on the road, to like how many cars are out there now and how many cars were out there 10 years ago. If you think about the cars, like 10 years ago, you'd see people in like a 1980 Corolla, 1980 Datsun Bluebird, 1980 Daihatsu Charade, all that sort of stuff. If you look at people now, you won't see any cars that are more than sort of 10 years old. And the reason being is that the auto loan market has become so strong. 90% of the people that are out there purchasing vehicles nowadays are using debt in order to buy them. That's why there's so many new cars and they become more of a disposable asset. It's not the vehicle that's the asset. It's the fact that the when they sell a vehicle, the finance that's attached to that is the asset that they can package that up as a derivative and sell it on to someone else. So when I talk about the world being awash of derivatives and real dirty sort of Ponzi scheme sort of setups, that's where the debt bubble just keeps growing and growing and growing. And I think we're coming to an end to it. And I don't think it's going to happen right now, but I think that we'll see it, really extrapolate over the course of the next decade. So, Stephen, hey mate, what do you feel about the property and mining towns coming up, considering the shutdown in most sectors of the economy? Do you think that these may receive increased values with opening up of the market, or for the fact that mining sector has continued to produce through this period? Good question. I've been, blowing the trumpet about mining towns. I do not like mining town properties. Now, just make a very clear disclaimer on mining town properties. I'm not a fan of buying in mining towns because there is a lot of volatility around that. However, I believe we will see commodity prices rise on the tail end of this position we're at the moment. And as we see commodity prices rise, it'll be more profitable for the mining operations to dig crap out of the ground, and therefore I believe we'll see a boom in those mining markets. So some areas picking up properties for dry throat, no more drink. Picking up properties for a quarter of what they were selling beforehand will be it is really exciting. Some areas have started to see some amazing growth. I picked up 3 properties in a mining town at the start of this year for $50,000 and $60,000 price range. Those ones, there's nothing now under $120,000 in that market. There's another mining town area where I was picking up for $35,000 to $50,000 per house, and there's nothing now available under $100,000. So these markets are starting to recover, but only specific, very, very specific mining towns would I touch as well. So, Cosimo, any more news on the Gold Coast boom? There is a boom happening in the Gold Coast at the moment. If you go online, you will see a lot of properties under contract and sold. There is a reason behind that. I only talk about that offline. I talk about it, so I will let you know about that, Cosimo. But I only talk about the reason as to why the Gold Coast is going through a boom offline and on the phone normally when I'm having strategy sessions or talking to my insider sort of buyers agency investors. So I will share that with you offline and tell you about why the Gold Coast is experiencing a boom and why I think we will see a really nice boom come through this period of time. It's a change in legal policy up there, which is causing this boom, which is very similar to Sydney going back about a decade or 15 years ago. Manrico, do you normally prefer stocks that pay dividends quarterly or not necessarily? I'm not a big fan of stocks generally, but I do like dividend paying stocks. At this period of time, not a lot of stocks are going to be paying dividends, but that will show the opportunities. Like as these companies start imploding and volatility hits their books, do I think, for example, NAB will go down and sink? No, I don't. But certainly the share price over the course of the last 6 months has taken a massive beating. And I think there's a lot of other institutions which will take large sort of beatings, and that's the opportunity out there in the marketplace in the paper market in time to come. But I don't think we're at the bottom yet, and that's just my personal viewpoint and not financial advice. Jamin, hope you're doing well, mate. What are your views on New South Wales government announcing on buying real estate today? Also, when do you think the market in Sydney will be back to normal in terms of property as such? I covered on that a little bit earlier into the video, so I'll have to redirect you back to that as well, so I'll be boring everyone that was here beforehand. But in short, it's great. Like, this is all stimulus packages that are going to push up the property market. A lot of people might look at it and be like, oh, well, things are tough out there and whatnot. Imagine when the government purchases all these assets and then there's no new stock coming in the marketplace and we need more properties to be built. That is where some new opportunities will come from. But liquidity is being injected in the markets. The buyer of last resort is central banks. We've got central banks, giving money to the governments in order to purchase up these assets to stimulate the economy and keep things afloat. So do I think the market's going to fall off a cliff? Absolutely not. And I've explained that in the video beforehand. Also, when are you doing property in-depth podcast, as you mentioned last week? I don't know what I mentioned. I think I may have said something. I was doing a podcast. Yeah, I've got a few podcasts that I'm doing at the moment. I've got one to send out to the community I did with someone the other day. But yeah, I've got a mind blank from chatting to everyone for the last hour. Do you think they'll ever do no deposit 100% loans again? I feel that we are sort of there. If we look at what was launched at the start of this year, government did a first homeowner grant, which enabled the first home buyers to be able to only put down a 5% deposit, and they would cover the mortgage insurance, which is very interesting. And now they're covering the deposit for the property. I believe that as things get, as currency, devalues a bit more, as the need for liquidity be injected, the need to stimulate the economy. Imagine if they say no one's buying property today and we're going to have a big crash and they want to stimulate the property market. Imagine if they said, well, look, all you have to do is put down a 2% deposit, you can buy a property. We're trying to, stimulate the economy. Imagine that. These are all the opportunities that are occurring. But when they start launching campaigns such as a 2% deposit, if they were to do that, if they were to launch a stimulus package like that, the market would increase very rapidly and recover very quickly. Will they do that? Who knows? But they're not going to allow the property market to collapse. They're printing their way through this, guys, whether you like it or not, and will come at the demise of the currency that we use. Ash, hope you're doing well, bro. Hey, Nathan, great video again. With pulling equity and sitting on it in an offset, do you still pay interest on it? Whilst it sits there, been thinking about doing this since I heard you say it the other week. Depends how the loan is set up. You could pull out the equity, put it in a separate bank account. That would incur interest. If you structure the loan correctly, you could have it in an offset account, where when you pull out that equity, it sits in the offset account. The money in the offset account offsets the interest payable, meaning that you wouldn't be paying for that money sitting there. So if you'd like, just flick me a text. I'll probably forget about it after all the questions that have gone through here. Flick me a text or send me an email, and I'll look into it and get it organised from my team for you. So thanks for watching, man. Thanks for the feedback. John, thanks, mate. Legend. You're a legend for being here. Thanks for spending your evening with me, guys. Better to structure it as it's interest only, principal interest. We'll still pay monthly commitment. There is all different ways of structuring up. Phil, where is the Fondler tonight? For those of you that weren't checked in last week, we had some real weirdo in here that was in his mum's basement. I could have pictured him without his, pants on or something, watching the video and creeping on everyone here in the message chat. Unfortunately, everyone, I blocked him just for the betterment of the community, because we don't need to, have people like that around. We can have more constructive chats. But I think he's probably still where he was last week. So yeah. Cosmo, if you take up the bank's offer of not paying your mortgage for 6 months, how will it affect your future lending? Good question. It's still very super early to tell. I don't think, from what I've been told, is that it won't affect your credit file, which is cool. However, if you're going to refinance that property and the incumbent bank looks at it and goes, okay, your mortgage was set out at 200,000 and now you owe 205,000. You haven't been paying your mortgage, you're 5,000 in arrears. They may sort of question that, and it could be a bit of a hurdle to refinance. So if you're not looking at refinancing your property anytime soon, it could be fine. But if you are thinking of refinancing your property, it may be of a hurdle, which is still very early days for how this could affect you. So just a bit of heads up for everyone that's thinking of doing that. Gavin, your thoughts on investing? My super into property self-managed super fund. My thoughts on investing your super. I don't know anything about you, Gavin, from an aspect of your super and whatnot. However, I personally have a self-managed super fund. A lot of people I know have self-managed super funds. The questions I always ask people is, everyone here that's watching this video has a super fund, most likely, or should have one. Where is your money, right? Who is looking after your money? If you had $250,000 in a super, if you had $100,000 in your super, and that super, money, let's say it's $250,000, let's say it's $100,000, right? That $100,000 is your money, right? What are they investing it into? Who is looking after your $100,000? What are they doing with your $100,000? Where is that $100,000? And are you ever going to see it? Are you ever going to get it back? The reality of it is that if we're down here playing the pokies down at the pub, not that you want to go to the pub, let's say old mate comes in with a beer and he's like, oh, hey, Nath, can I borrow $100,000? We'd all tell old mate that comes in and says, I want $100,000 to F off and go home. The thing is that person's asking for $100,000. That could be your super fund money. It could be $200,000. It could be whatever, right? If we were to lend that $100,000 to this guy, at least if he didn't bring it back, would know what he looks like, would know who he is, would know where to find him, would know, we could go send the boys around and get the money back out of him some way, shape, or form, right? But in your super fund, who are you dealing with there? Right? If you can't answer who you're dealing with, what they did to protect yourself prior to this occurring, what your money's invested in. A lot of people say, it's invested into shares, it's vested into property. Well, where is the property? What shares exactly? Show me the register of what shares my super fund is invested into. If they can't share that with you, well, then you don't know where the fuck your money is. And in super funds, they invested in all the derivatives markets. They invested in all the Ponzi scheme junk, rubbish bond. If you've seen the Big Short, it's the cat shit wrapped in the dog shit. And, I personally believe everyone should be their own financial advisor. With super funds, I can't give that advice, and especially not on a live stream like this, because I don't know much about you. That would be reckless in itself. And finally, because the ruling forces would want to have my head for giving financial advice. But if you are questioning, whether you should put your money in a self-managed super fund, whether you should restructure your super fund or wherever your money is, flick me an email, flick me a message, send my team a message at admin@beinvested.com.au, put in the heading, a subject line, super, and I'll get you in contact with someone that specializes in that to be able to give you personal, tailored advice, even if it's just a 15-minute chat, just to have a bit of an assessment on your position and let you know whether it is beneficial to go down that road or whether, there is some other sort of structuring that you could do to protect yourself. But hopefully that answers your question, Gavin. But personally, I have self-managed and I would never go back to a normal super fund. That's personal myself. Totally agree. I'll never forget hearing the bell ringing at school when I was about 5 years old, thinking, look at everyone while running back to the class. Why? That's not for me. I failed every grade from kindergarten, year 12, in the 12-year indoctrination camp. I went to 5 high schools, not because I was stupid, not because I got expelled. just due to the fact that I didn't fit in. I felt like I was in prison. I felt like it was communist, right? Those public high schools are disgusting. And I just feel like, we get forced to send off to those sort of places. When I have children, I plan on homeschooling them and training them right and making sure they know how to stand upright and ABCs, how to communicate with people, but not brainwashing them into the fact of society's expectations of normal. So everyone's position is different on how to raise their kids. I'm not here to give parenting advice, but it's important to be awake to this system that we're trapped into. So Sparkles, Nathan, would you consider deferring your interest rate on loans and saving that to do a reno to improve cash flow? I did mention the pros and cons about it a couple of moments ago. For me, I haven't done it yet. I'm just waiting to see. I sit there and when things go wrong, I just observe, right? I'm like the silent guy that just observes, watches, sees how things happen, and then I take that jump with it, like strike when it's right. And still, it's very early. You still got time to apply to the banks for all this sort of stuff. I'm excited by the thoughts of it. I've done some calculations. If I pay $100,000 per month in interest bill across my portfolio, then that's $600,000 that I could be using, I could be saving in the next 6 months, and that $600,000 could be used as capital to buy a couple of properties. And it actually just gave me an idea as I was saying it to you guys that it's actually sounded like a cool thing. But from that perspective, I don't want to give that advice. As I said, I haven't done it. I've been strategically thinking about it. Everybody's position is different. I am liking the fact that I'm paying my mortgages on time, and I think that it's something that there could be some sort of incentive for those loans that haven't gone on hold, maybe in the future. I don't know. That's what I'm just waiting to see with interest rates, if they have like a two-tiered system of those that are paying on time or not, or there could be multiple different actions that could be taken. So, but it is definitely an attractive option. And it's something that I'm definitely looking into personally myself, but I haven't done it as yet, just sharing that with you guys in the community. Bala, is it good strategy to buy a car for instant asset write-off to save tax as inflation increases, your car prices going up? Is it a good time to upgrade? I wouldn't look at it from the tax deduction. I wouldn't look at it just dump it in. I'm just driving my truck with the front end. It's been smashed with a kangaroo. The front end's missing off it and cable tied at the moment. Just for the fact that I've got a new car that's on deposit at the moment. I'm like thinking of picking it up, thinking of I could use that cash to pick up some more assets on the cheap. So the car's not really a good asset that's going to go up. I'd rather sink that cash into more assets, more proper sort of asset. But John, damn, miss this. We'll have to catch the replay on YouTube. Sorry, mate. Try to be here every week, 8 o'clock on Tuesday. So Tuesdays, 8 o'clock on Facebook Lives. Sometimes it'll be 5 minutes early. Sometimes it'll be 5 minutes late. I have a really busy schedule. Sometimes I'm like, oh shit, it's 8 o'clock and I've got to get on YouTube and hang up my strategy sessions with people. Tyler, Gold Coast, hint, hint, wink, wink, maybe that may be it, maybe not it. Angelo, great as always, Nathan, regarding restructuring, refinancing finance from commercial to your home loan now, how difficult is the process? Angelo, need to chat to the person that we spoke to beforehand. I'll get Jeremy to speak to you tomorrow about doing the reconnection there. There's some people it's harder at the moment. Some people it's a bit easier. Depends on how the bank wants to look at your file. So I'll get someone to be in touch with you on that front. Hey Nathan, hope you're staying safe during these shitty times. Thanks for the awesome videos, mate. I'm doing really awesome. I have smiles from ear to ear. So excited at the moment. Obviously, we're all affected together. There is, people are affected in different ways. I see the opportunity. I was very well prepared for what we're seeing at the moment. I wasn't prepared that, that people will try and be stuck in their houses and whatnot. However, from my perspective, I saw it as from a financial collapse, and I'm sitting very pretty. I'm very excited at this point in time, and I feel excited to be alive and privileged to be alive at this time to witness what's happening. Hopefully you're staying safe as well, and taking advantage of what you can at this period as well. So, guys, I just realised it's 1 hour and 49 minutes. I've got a jet. I'm going to go for a walk, and we'll catch up soon. Thanks for tuning in. If you have any questions, reach out to my team. Send an email if you want to join Birchfeed. It's free. It doesn't even cost you anything. I don't ask for your credit card details. I don't ask for anything. It's absolutely free. Send us your phone number. We'll add you into Birchfeed. If you need any help with sorting out your super fund, reach out to my team. If you need help in refinancing your portfolio, reach out to my team. If you want to have a strategy session, very, very limited spots. My time is booked out for months in advance. So there's only very small, minimal amounts of time. Reach out to my team. Otherwise, I won't be able to help you, before later on personally. But my team can still help you out and direct you in the right sort of way. So, on that note, and also as a final note, I just wanted to welcome aboard all the new Birchfeed subscribers. I saw a lot of commentary there about people liking what's in Birchfeed and all that sort of stuff. So, appreciate the feedback, and thanks for all the new subscribers that are coming on board. We'll catch up soon. Stay safe, and I will see you next Tuesday. Bye for now, guys.